Hey Brian, how are you doing today? This is Brian Wang over there. This is
Yeah.
Randy Kirk over here. Anyway, Brian and I, we both believe that that Tesla made a mistake yesterday, and
Oh
it
yeah.
kept making the mistake today. I don't know what's wrong with Tesla. Well, maybe Brian does, and I have a couple of ideas of mine too. But we were at your number. We were at 338 and higher, and you were not alone on that 338. It's like everybody agreed on 338
Yeah.
and higher. And then yesterday, somehow it broke below 338, and today it's gone all the way back down to its kind of one of its favorite hiding places around 330.
Mm.
So what do you think? What was your theory of the breakdown?
Just it's on technical analysis, it's called a false breakout, or one where like you can go over, you can start breaking out, and then just can't follow through. But holding up at 330 is fine. Going down to like 320s and something like that is also fine. It's a lower level where, in theory, if, a really bad breakdown will go 300 or 280, but then it can still go back up again. So it just I think that institutions might be impatient, waiting for the big robotaxi expansions and other things, which should happen next month. And I think, let me make some money on my Friday options and stuff like that, and market manipulation. I can just shove things down and then I'll buy it back up again. I'll just send it down $20 and then I'll get it, from 320 up to 340 and then make a bit more money. So,
So I talked to Bradford Ferguson last night, and he is starting to use AI
mm,
to run Rebellionaire. He has not yet started to use it as a predictor for stock moves in an individual day, but he is starting to use it more and more in his company. And have you started experimenting with using AI to figure out when the stock is going to move?
um, I am mostly using it for research around um, confirmation of fundamental analysis. Um, I can, for technical analysis, I can see, the stock movements, on a percentage basis, where it's like, oh, 50% chance, 60% chance it moves up, that kind of thing. But it, based on break of structure and all that kind of stuff. So those kind of movements, but those are not um, something where you could have, I know how to get to 80, 90% certainty,
Right. Right.
right? So you can get some general feel of it. And I think if you have that, that's usually pretty good. And then if I have a theory like I had before, before the election, where I said, hey, if it breaks those two levels, it looks like you can just like run right through these levels and then get to a high number, right? All-time highs again. You can see the setup for that. You can see, okay, all these levels clear out, and then you get into an area where it can just really shoot up. Conversely, you can also just really fall down quickly through certain levels.
Sure, sure,
So
sure.
there's a certain gap thing that you can see. But in terms of like, if Bradford has some way to pick it more closely, then that's a fundamental breakthrough that means that Bradford could be the next Warren Buffett or Elon if he can
Well,
actually.
apparently, according to my reading, there's an awful lot of companies right now that are already using it for
Yeah,
those purposes successfully. So it's going to
right.
get harder and harder for us individual users, retail folks, to compete with the speed that they'll be able to do these things. One article I read today said that they put it down, especially today, to super low volume, really low volume, and a possible bear trap.
Mhm.
What do you think about that idea?
Yeah, it's something where if things are not a lot of people with a bunch of conviction behind it, like a bunch of diamond hand people, then like I said, market makers can move the stock however they want, right? Because if I have enough money, I can then send it down 20, $30, particularly for Tesla. You can have these big moves where it drops $20 in a day. Someone behind that, a company or a bunch of things. So, and Jim Cramer and others have talked about that, how you could do things on a thinly traded stock to move it up and down.
And on the Friday, just before the last week of August, which is the last 2 weeks of August, is when everybody's on vacation. The
Mhm.
entire world is almost like Christmas. Everybody's on vacation. So you would think that, the next 2 weeks are thin volume anyway, and the Friday before, you would kind of expect a low volume day. So people could have been in there knowing this,
Mhm.
grabbing a hold of that opportunity.
And also it's, options, weekly options closing at the Friday. So things are going to move around there. Whereas like market makers, a bunch of people are at whatever number of the options. I want to get those out of the money. So I will drive it down below that number so that those people lose money and I scoop up those gains. Because they would normally have to deliver, those contracts
Right.
if they didn't drive it down. So there's a bunch of extra financial incentives kicking around on a Friday.
So on the fundamental side, today the bloom already came off the rose with regard to the Fed going down 50 basis points, which was all the talk on Tuesday, Wednesday and Thursday. No, Tuesday and Wednesday, and then Thursday because the PCE came in a little hotter, PPI came in a little hotter than people thought, which I've explained away and which the market seemed to agree with me by the end of the day. It's still kind of got people thinking maybe it's only going to be 25 basis points and maybe no cut. And that would impact Tesla's opportunity in the fourth quarter, where we might be looking for car interest rates to come down to help after the $7,500 thing goes away. Do you think that could have been any part of what happened today?
Yeah, I think it's a part. Again, it's lack of strength means that you have no safety net, that things can go down because if you're not going up, then you can go down. So
Okay. All right. So on the interesting side of things, on the good side, I was curious to get your take on the fact that we are now hiring test riders for Mumbai.
okay.
So I know that you've studied all the technology around robotaxi and FSD for a very long time, as I have. But I'm just, do you think FSD is ready for? I mean, apparently, Tesla thinks it's ready for Mumbai. What do you think?
That would be one of the hardest places to go because the driving conditions are really, really terrible there. And then also the cost to pay someone to do your driving is so low. Just like in Brazil, just like in China, you can pay someone less than $1 a mile, even okay, 50 cents a mile, and get that thing them driving around. Um, but I'm sure, you know, um, Tesla wants to get a localized, really good version of FSD for the high-end purchasers of it, because that coupling of FSD working well, not necessarily for robotaxi, but just for
Even FSD?
even FSD for quality ride.
Yeah, yeah, okay, right. Okay, so I think it was Bradford Ferguson. I hope I'm quoting him correctly, who said there's a lot of conversation right now about, I think he might have been responding to Gary Black, who was getting all nervous about the fact that it's taking so long to get the safety rider out. And was like, what difference does it really make? The day that the safety rider comes out is going to be the day when the ramp of robotaxi will take place. We'll know that it's going to take place. Everybody will get it, and that might be tomorrow. It might be September 1st. It might be October 1st. Who cares? It's coming. It's just a matter of when. And I thought about that for a minute. I thought, maybe that's going to happen at exactly the same moment that version 14 uh, is goes wide.
I think it could even take a few weeks longer than after version 14 comes out. That if you have a version 14 with 10 times the parameters merged in with the Austin build, which is more advanced than what we have in their cars, then you would have the step up in safety. So if you were waiting for the step up in safety, right, then you would wait for the merge version, get it out, and get it used for some number of weeks. So then it could even take, if that happens in September, like they're saying, could be the end of October, it could be November before they then take all the safety monitors out, safety riders out. But you can also, if you're saying that it's already good enough, we're just waiting for the other stuff to tell us, then they would not be correlated to that. And they talked about doing it maybe in September. So sometime between September and November, it'll happen. If we're waiting for the new version, then it could be as late as November, or it could happen same time or whatever.
So we take into consideration Elon's comments and statements over the last few days. We take into consideration what we know about the capabilities that it has right now. We take into consideration the version 14 having 10x the parameters. We take into consideration the statement that the Austin version is 6 months ahead of the one that we're using in our cars right now. You put all that together, man, it sounds to me like there's a good reason to believe that Elon's right, and that once we do take out the safety rider, once we do invite the public in, once we do all those things, the ramp could be fast.
Yes, yeah. I think that taking the safety monitors and having the ramp go into its fast phase, you know, thousands of cars, then it'll be clearly solved. If you have just part of it, just moving safety monitors, but only have 10 vehicles, I don't think that does anything. I think you need to have at least a few hundred vehicles for it and no safety monitor. And then we'll start talking and be very clear once you're at over a few thousand.
Okay, let's talk about the stock market in general now. I've been saying for, I think 2, maybe 3 weeks, maybe you and I have even talked about it, that I think that the market is stretched, using the S&P as our guide, the S&P is over 22, I think over 22 and a half PE. Tom Lee comes in and says, yes, but the equal weighted version of the S&P is only something like 18 or 16 and a half, and it's been higher than that in the past. Other people have come in and said, oh, well, there's the 7 stocks are 40% of the S&P anyway. And quite frankly, the rest of the S&P is the part that's overstretched, not the not the Magnificent Seven. They've got plenty of room to run. So there's been a lot of this back and forth, but until today, I hadn't seen anybody really address, are we overstretched? Well, what I found was this article from MarketWatch, which got me really worried because what do you do when everybody thinks the S&P has room to run?